Happy New Year. Today is January 3rd, and the video we are going to talk about today is how does student loan payments impact your credit score, as well as we're going to address some very important dates in 2024 for student loan borrowers to be aware of. This is coming to you from my lovely backyard and my tiny house right behind me. So, this channel talks about all things student loans, personal finance, how to start building wealth, not delaying that, and not letting student loans get in your way. So let's dive in right away. Let's talk a little bit about this credit score, right? What does credit score comprise of? What does it comprise of? How does student loan payments impact building positive credit? There's this myth that you need all kinds of different debt. There, of course, mix of credit is a small percentage of your credit score and profile, but being consistent and showing responsibility around specific types of debt payment, you do not have to have every type of loan, car loan, mortgage loan, student loan. You don't have to have everything to start building very positive credit. This is coming from someone I have an 820 credit score. So I've been there, done that. I've had student loans. I've always paid off my credit card. I have a mortgage, a couple mortgages. The point is I do have a mix, but there's no need to build up consumer debt or things that don't build value just to quote unquote build your credit score. So let's go into that a little more. It's very important, and a huge mix of your credit is just making on-time payments. So for the debt or the payments that you have, pay on time. That's really, really key. And what can you do to make sure you pay on time? Set up auto pay for everything you have to pay on a monthly basis. Set up auto pay. If you can control the repayment date, which for a lot of different loans and credit cards, even you could set up the payment due date. I'd set up the payment due date at a date that is best for you. The first of the month for me is always good because it's easy to remember. All my payments are due the first. Some people, because they want to stagger or do payment due dates based on when they're paid, that's fine. Just set consistent payment dates across your different loans and credit card and other consumer debt that you may have so that you can consistently pay it. Set up auto pay and make sure it's paid on time. That's hugely important. A small percentage is mix of debt. Again, like I said, that's not as important as making on-time payments. The length of all your accounts. That's why if you want to shut down an account, cut up Dave Ramsey's famous, cut up your credit card, cut the credit card up. It doesn't mean you have to close and cancel the account, because if you close and cancel account, it will lower the length of your credit length and credit history, particularly if you're starting out. So you can cut up your credit card, but no need to cancel it entirely, right? There's another tip. And of course, I want to talk about if you miss a lot of payments and you default, especially on your student loans, of course, there's harmful impacts. It will hit your credit. And if you're consistently late, it will hit your credit pretty hard. You can get your credit score dinged by hundreds of points if you consistently do not pay on your debt, since it's a pretty large percentage of the credit score profile and the credit model. And of course, with student loans, when you go on default, not just do late fees pile up, but they do a 17.92% of your principal balance hit. So if you owe $100,000, like literally thousands of dollars can accrue just for going into default, and they hit you with all these crazy fees. So going delinquent will not just hurt your credit score by hundreds of points, but it will also add thousands of dollars to your balance, which is very negative. So I say the mantra is pay on time, pay on time, pay on time. Use my tips to pay on time. Set the due dates where you can remember, set the due dates where you can make the payments, and set up auto pay. With student loans, Servicing World, setting up auto pay will get you a 0.25% reduction on the interest. That matters if you are paying on a standard plan. If you're paying on an income-driven plan, it does not matter as much, but obviously paying on time still matters, okay? 40% of people that got kicked into repayment did not make an on-time payment for their first payment. So unless you're in administrative forbearance because your servicer couldn't figure it out, try to make on-time payments. If you cannot afford the payment, there are options. At LoanSense, we provide you a completely free plan. At myloansense.com, we provide you a completely free digital plan. Below, I will link a 29 quick session. You can even gift this to others if you missed giving that you didn't see your cousin, you didn't see your sister in person, they have student debt. It's not too late to gift them to wishing them a prosperous new year. A $29 mini session will provide general guidance. It's to get people kick-started in the right direction. If you have student debt and you really do need to lower your payment, you don't know what is happening, of course, you can go to studentaid.gov, log into your account, figure out who your servicer is, if it's been transferred, when your payments are due. If you're on administrative forbearance, the good news is that these payments count towards loan forgiveness. So now let's go to the next segment of the video, which I talked about. Let's talk about dates, important dates. The income-driven repayment waiver adjustment program has now been extended all the way to the end of April. That is really, really, really good news, because that means there's more time for people to consolidate their loans. And if you consolidate loans with different repayment lengths, it will count for, let's say you paid one loan for 10 years and another loan for 13. It will count all groups of loans at 13 from what we're seeing, which is really good news. So if you have FFEL loans, now is the time to consolidate before April. Biden's administration, all the servicers will roll out the full save by this summer, which means that not only does the formula allow for higher earnings before that you even have to make a payment, but they will also lower the percentage of your discretionary income or of your income that you have to pay toward your debt for undergrad loans to 5%. They're going to roll out all the features this summer. So SAVE will change slightly with added benefits. And of course, 2024 is the year Biden's going to fight again for the $10,000 to $20,000 of forgiveness under the Higher Education Act, but for very specific groups of borrowers. I have a whole video I will link to who those borrowers are. There are people who should have had their loans forgiven, never applied, people whose balance is higher than when they started, and a couple other. So I'm not going to redo the whole video. I will link it. Again, if you need advice, understanding on what the best course of action is, please get a free plan at myloansense.com or schedule a $29 mini session. It's 15 minutes. We answer general questions. It's like a punch mini session to get people on the right direction, especially if they've met with us in the past. And of course, I always have to answer, how are we different than doing it on your own or doing it through studentaid.gov? How we're different is we strategize, and we will help you manage your paperwork. So if you have issues with your servicer, we can help you manage that. If you're trying to buy a house, we can explain the impacts. If you need to lower your payment to buy a house, but then you want a different strategy, post-close, we can help you create that. We can help you get the documentation to close on a home. The whole point, though, is if this is a financial stressor to you, you will have your stress levels reduced significantly by meeting with one of our experts today. I personally train everybody at LoanSense you'll meet with. I'm highly passionate about solving this problem, because I too would not be having this tiny house in my backyard and own the house in front of me had I not addressed my student debt. And by the way, I still have student loans. So don't let student loans hold you back from figuring out how to live your life, how to build wealth, right? You can't always have your cake and eat it too, but you can make smart financial decisions to not defer building wealth because you decide to invest in your education. And of course, education is still an investment, so it's something that should have a return. There's no question and doubt. I do think there should be reforms to reduce the cost, but it doesn't mean you cannot own or you cannot build wealth because you have student debt. Don't let it paralyze you. We're here to support you. Let us know how we can do so. Again, myloansense.com. We will link the $29 session below. Please like, subscribe, comment, and ask your questions, and we will try to answer them. Have a good day and Happy New Year.